Thanks, Chi-Chang, for bringing up three very interesting points, and I hope we can discuss more of these points in greater detail later in the Q&A session, especially whether or not GST is likely to actually increase illegal activity and also to perhaps increase the level of leakages from tax evasion. And perhaps Chi-Chang, something that I've talked about before with Chi-Chang is the possibility of actually reducing government expenditure on subsidies. I think Chi-Chang feels very passionately that perhaps all prices should be higher than what they are now. I think Azrul is not here yet. While waiting for Azrul to come, can I invite Professor Wu Wing Tai to come and give us his feedback towards Dr. Lim's paper. Thank you.
Good afternoon. Thank you. I'm the Executive Director of Penang Institute. I want to thank you all for spending your afternoon here to support our activity. In preparing my comments for this session, I had the feeling that I had spent a large part of my life to comment on this particular paper. I was on the consultant team for the Ministry of Finance in China to prepare its VAT, which is our GST. And my experience from China, the VAT was introduced on January 1st, 1994. It was certainly a very effective instrument in raising money from the public. In 1993, before the introduction of the VAT, China collects 11% of GDP in total taxes. Today, it is around 25% of GDP, despite the great leakages in the collection system. So one thing is undeniable. A GST is very effective in collecting money because it applies to every transaction by everybody. And let's get to the first item, as was raised. Why are we doing this? Because the budget deficit is worsening, and if it continues to worsen, and if the Malaysian sovereign bond is downgraded, all corporate borrowing in Malaysia would be much more expensive. So it is not just a matter of the government borrowing on higher interest rate, but all of Malaysia would be borrowing on a higher interest rate. So it's very important to address the budget deficit. There are two ways to address the deficit, as Chi-Chang pointed out. Number one, you could always cut spending. And one way of cutting spending is to say you increase expenditure efficiency. You spend less money, but you get the same products, expenditure efficiency. And the other way is to raise taxes. I would say that the two usual answers around the world is either cut government expenditure or you do a mixture of both. The current shutdown of the US government shows that in the United States, they have decided that there has not only been difficulties in reducing the expenditure efficiency, increasing the efficiency, because the government is almost as efficient as it could be given the way it is. And now they want to cut actual expenditure to reduce the amount of services produced because they think that the government has no business doing some of the things that it has been doing. Those are difficult questions, but I think that all reasonable people, or rather people who are not extremists, would say if there are two ways to do something, let's think about doing a little of each. Then why don't we just do number one alone, raising taxes. Doing number one alone is a measure that is avoided almost anywhere in the world for the simple reason that it reduces the incentive for the government to ever be efficient in its expenditure. If you can always collect money to cover whatever you spend, then you should always do it. Why should you ever want to talk about being efficient in the service you produce? So in most countries where people have some say in what the government does, they never have increases in expenditure without some adjustment in the expenditure, without asking for improvements in expenditure efficiency. And what could be done to improve expenditure efficiency? Chi-Chang has given us many suggestions. Roughly, one thing you could do was, we have these reports by the Auditor General. We could make it such that every time the Auditor General pinpoints some wrongdoing, there should be punishments that go along with it. Not just pointing out and then we all have a good laugh and shake our head and that's the end of the matter. So there should be consequences. The second thing is, Chi-Chang talked about government expenditure could be decreased by 2% without impact on the services it provides. I think 2% is to understate the creativity of our Malaysians in general. Because if we have a different way of procuring products by the government, in other words, like the experience of Penang in going from closed tender to open tender, is that our development expenditure is around at least 30% lower than what it used to be. Basically, we buy the same thing at a price that's 30% lower. So if you look at the development budget of Malaysia, and if we can buy the same thing at, say, 20% lower, we have wiped out the budget deficit. So there is room for expenditure efficiency improvements. So one is, we do something when the Audit General report comes out, which is after the fact, after disaster has happened, after the roof has fallen down. And the second part is, before the event occurs, we do an open tender. The third part is, of course, to do something while the process is going on, which is we've got to strengthen the inspection and monitoring of projects in progress so that we prevent the roof from falling down in the first place. And that would certainly improve expenditure efficiency. I agree that we will let the voters judge about expenditure efficiency, and let us say we do want some tax increase. As I said, I favor a mixture of both. Let's talk about some considerations in raising taxes. The first part is this particular tax effective? GST will certainly be effective in raising taxes. There are experiences all over the world. The second part is it equitable? Yes, it might not be equitable, but we may have to trade off against the fact that if all the businesses were to have to pay higher interest rates, then the economy as a whole would suffer. And why should we have the GST? Why shouldn't we just use the income tax to soak the rich? The trouble is, soaking the rich might mean that we are cutting our nose to spite our face. For the simple fact, we live in a globalized world. If you collect higher taxes on the higher income, they invest elsewhere, and the economic growth rate would slow down further. Basically, there is a limit to how much we can soak the rich. So given the fact that we cannot soak the rich, I'm going to suggest another way, one additional instrument that is available later. But here, the last point I'm going to talk about has to do with Chi-Chang's point. This paper is one that has spent its time talking about what is the impact on consumers. Most of the revenue will come from businesses, what the VAT parts of it. And what the experience is that every business will tell the government what the cost of its inputs were, intermediate inputs. In other words, what was its total wage bill and profits, and you tell the government what your total intermediate costs are, and you tell the government what the total gross revenue is. The difference, which is the value added, is what that is taxed. How is the government going to know what is the cost of your intermediate? You can report, and the government has to be able to check it. And if all transactions are computerized, and monitoring is very strict, then we can implement it very well. China, which emerged from central planning, which means it has records on almost anything that happens, finds it very difficult to collect information on the actual cost of businesses. And one thing I found out that when my report was adopted on January 1st, 1994, was that it created a new market in China, a market that exists at every railroad station, at every airport, where the business trade travelers are, a market in receipts, in fake receipts. So lots of people would buy receipts and turn that in. And it turns out it was exceedingly hard to tell fake receipts from real receipts. And it really gave the expression of people are dying to pay their taxes a different twist. Because I found out that in order to reduce this cheating, there's been quite heavy crackdown. Several thousands of people have been shot for economic sabotage, for dealing in false receipts. But we will do better, of course. And so in Malaysia, so the implementation of business is a difficult thing to do. The last thing I want to talk about is that, is it possible to raise more taxes? Because the big argument for the GST is broader. It's collect more, it touches more people. I think we should make it even broader, because I think there's one class of taxpayers that would not run away, largely because the country owns these taxpayers. Specifically, I'm talking about our state investment agencies and our GLCs. What do they do with their profits? The profits is not turned over to the treasury to cover expenditure. The profits is to make the GLCs and state investment agencies even bigger. Well, make it even bigger may not be a bad thing. But let us see what have they been doing with the profits that they have kept. I am going to propose that more of those profits should be turned over to the government to reduce the budget deficit. We should broaden the tax base some more. Basically, what was the old days of GLCs? In the Mahathir era, a lot of GLCs and the state investment agencies is to create new industries to enable transfer of technology from abroad. For Pervaja, it was to get the direct reduction technology from Nippon Steel. Unfortunately, that did not work. And Proton Saga, it was to get automotive technology from Mitsubishi. So there was a very clear goal. The role of the state investment agencies and GLCs is to facilitate the transfer of technology, and we can judge the success of it by asking in the end, do they produce products up to international standard? In other words, did we export any of the products? Like in Korea, all of them ended up being exportable goods. So that's an international benchmark. We know what was the expenditure. Today, it is quite different. With the days of Pavaja and Proton Saga are behind us, what do our GLCs and state investment agencies put their money in? They have gone heavily into services, hospitals, and real estate. Not starting new companies, as buying over existing companies, driving out the private sector from these niches. And when you drive out the private sector, does private sector therefore use the funds that they get to start new businesses? Or are you driving them abroad? After all, Malaysia already has the second largest amount of capital flight in the world. China has the highest, around 600 billion in 2010. Malaysia around 50 billion. But on a per capita basis, around $300 per person is running out of China, and around $2,275 per person is running out from Malaysia. So when the government buys and pushes out the private sector from its profitable niches, where does that money go? The trouble with the present behavior of focus of GLCs in using the retained profits is that it's not even pretending to acquire modern technology for economic development. And the products itself cannot possibly be benchmarked against international standards because they're services. Real estate is not tradable. You're not going to ship a house across the country, across the borders. Only in the Wizard of Oz are there flying houses from one place to the other. So, given the fact that what they are doing with the retained profits is detrimental to the long-run development of this country, I suggest that more of that retained profits be channeled to the federal budget in order to help cover the budget deficit. In other words, GLCs, Khazanah should be contributing more like Petronas has been contributing over time. So in terms of technical solution, I would say, yes, GST, only if two other things are done. One is there has to be improvements in the expenditure efficiency of the government. Two clear improvements, whatever the Auditor General identifies to be possible malfeasance, there should be investigation followed by prosecution. And the second thing is there should be transparency in the government procurement process. And the second suggestions I would have is that broaden the tax base, broaden the revenue base, not just to consumers, the low-income consumers, but also to cover the retained profits of the GLCs and the state investment corporations. So that if we want to increase the size of the state sector at the expense of the private sector, we do it as a matter of deliberate national policy rather than the empire-building instincts of our bureaucrats. I think that's the deeper philosophical issue that comes in solving the problem of what to do about our debt. Thank you very much.
Thank you very much, Prof. Wu, for raising that very interesting possibility or suggestion that perhaps Khazanah, who is involved in healthcare, and perhaps other GLCs like MRCB, who is involved in the real estate sector, should channel back more of their profits towards the government in the form of dividends so that we can use that as a way to reduce our budget deficit. Last but not least, I'm going to ask Azrul to come and share with us some of his thoughts before we ask the speakers and the panelists to come up to have a Q&A session. Azrul?
Okay, Assalamualaikum warahmatullahi wabarakatuh, and good afternoon. I was asked to be one of the panelists of this forum, but I was given the report by Dr. Kim-Hwa only yesterday, so I didn't have the time to come up with presentation slides. So I will just read whatever I've written as far as my response to his report is concerned. I think I don't have to elaborate further. I don't have to elaborate further what is it all about, GST or value-added tax. However, I would like to emphasize that there are three categories of taxable supply of goods and services. We have standard rated goods and services, whereby GST is levied at the standard rate. We have zero rated goods and services, whereby end consumers are levied at zero rate, although businesses can claim input tax credits at various stages in the supply chain. And last but not least, we have exempted goods and services which are not subject to GST, whereby businesses cannot claim input tax credit and cannot charge output tax to end consumers. Okay, and the list of these three categories of taxable supply of goods and services you can find in the report by Dr. Lim Kim-Hwa. Okay, in principle, I'm not opposed to the introduction of GST in Malaysia sometime in the future in view of the following advantages that we can derive from its implementation. Number one, broad-based consumption tax covering all registered businesses in all sectors and industries of the economy. And because of that, we should see the possibility to curtail the black economy and tax evasion, as well as we should see greater fairness for all businesses, whether they are in the manufacturing, wholesaling, retailing industries, since GST is levied at all stages of the supply chain. Advantage number two, we should see enhancement of the government service delivery and tax administration system thanks to the GST's self-policing mechanisms, self-assessment mechanisms, and also compliance features. And this will have lower cost of doing business. Number three, Malaysia will be in sync with the international standards or best practices in taxation system, since almost 170 countries in the world, or roughly about 90% of the world population, are under the GST regime. Number four, we should be encouraged by the fact that the government has pledged to replace the existing single-stage consumption taxes, or the SST, sales tax and service tax, which should be higher. However, we cannot brush aside the concerns of those opposing the GST. In particular, number one, GST is a regressive tax, whereby as a proportion of income, tax payable is higher for the lower income group than the higher income group, as demonstrated by the report, whereby the ratio of GST to income for highest earning household is only 1.56%, and the ratio is 2.62% for the lowest earning households. So that means the low and middle income groups bear higher tax burden than the rich if we implement GST. Although I must highlight the fact that we can actually take several remedial actions to make GST to be more progressive tax or less regressive without lowering the amount of tax revenue raised by the following actions. Number one, by introducing multi-tiered GST rates, by increasing the GST rates on goods and services normally consumed by the higher income group. But there is one problem, a few problems in fact. Multi-tiering increases the tax administration burden and more complicated to implement. Another action that we can do is to introduce a higher GST standard rate on a limited number of goods and services, such as transport, excluding public transportation, alcoholic beverages and tobacco, restaurants and hotels, as per the report, while the rest are either exempted or zero rated. But there are a few problems also. Practicality is an issue. Too high standard rate will not be acceptable to the people, and the possibility of increased inflationary pressures. Another reason why many people oppose to GST is the fact that there is the possibility of abuse by the government as an easy way out to increase its revenue by raising the GST rates, since a rise in GST rates appears less obtrusive than a rise in income tax rates, to the point of inflicting huge burden on the people, especially the low to middle income groups. And number 3, the possibility of GST becoming the source of high inflation, since in the Malaysian context especially, there will always be businesses that will use GST as a justification to raise indiscriminately prices, charges or tariffs of their goods and services, although the GST will in fact eliminate the service and sales tax, despite the existence of the Anti-Profiteering Act or the Competition Act and many other things, because of the lack of strict enforcement in Malaysia. Although I personally understand the urgency to address the perennial budget deficits since 1998 and rising public debt, as well as the need to diversify the revenue base and to reduce over-reliance on oil and gas revenue, in my view, what people are waiting for is to see the following few conditions to be met first, before we can consider implementing the GST. Number 1, people are waiting to see clear announcement of simultaneous reduction in corporate and personal income tax, as well as the abolition of the sale and service tax to be replaced by GST. People are waiting to see that minimum household income reaches a level deemed adequate to absorb shocks arising from the implementation of GST, especially to the purchasing power among the low and middle income earners. People are waiting to see widening of income tax brackets so that the middle income group will reach the higher income tax rates at a much slower rate. And people are waiting to see the commitment on the part of the government to reduce operating expenditure and undertake cost savings programs, especially to address leakages and wastages as reported by the Laporan Ketua Audit Negara every year, of which estimates from various sources range from 28 billion ringgit to 60 billion ringgit a year. And last but not least, people are waiting to see that the higher income group take a fairer sharing of the burden of adjustment. And we can do that by introducing, number 1, either buffered tax or a specific tax rate higher than the top rate of 26% for individuals currently, to tax millionaires or those with annual gross income of at least 1 million ringgit, or surcharge on the annual gross income of above 1 million ringgit. And number 2, capital gains tax or gains from the sale of financial assets such as shares, bonds, or other securities. And in fact, based on my rough calculations, after taking into account some assumptions, if we consider a RPGT-like capital gains on gains of sale of shares, starting at 7% for shares only, for example, held less than 1 year, 5% for shares held more than 1 year but less than 3 years, 3% for shares held more than 3 years but less than 5 years, and 1% for shares held more than 5 years, we should be able to rake in between 8.7 billion ringgit and 10.2 billion ringgit a year. And with that amount, we stand to collect more revenue by introducing capital gains tax instead of GST at 7%. That is expected to collect only 7.5 billion ringgit from consumers. And if I may, being part of the drafting committee for the alternative budget, one of the measures that I mentioned just now, the last two, will be included in the alternative budget. And with that, I end my presentation. Thank you.
Thank you, Azrul. That's a very nice way to end. For those reporters who are seeking a headline, maybe Malaysian Insider, you can put in there, Azrul proposes capital gains tax on share trading, held after a certain time to raise revenue instead of GST. Thank you very much, everyone, for your presentations. Can I invite all the speakers and panelists, Prof. Wu, Dr. Lim, Chi-Chang, as well as Azrul, to take your to take your seats up front. Can I also invite Pei Chi to come up to sit with us, because she provided key inputs and was a co-author to Dr. Lim in the drafting of the paper. So there will be questions which would require her input as well. Pei Chi.